In a universal life insurance, surplus premiums are reverted back to the policy. This means that premiums in excess of the current cost of life insurance are credited back to the account. The cash account is credited monthly with an interest that is set by the insurance company on a yearly basis. There is normally a guaranteed minimum interest rate from 2% to 3%. Every month, the cash account is also debited for the current cost of the life insurance to cover the death benefit. The monthly fees are also deducted from the cash account. In contrast, index universal life policies are not directly invested in the stock market. Instead, they use the financial value of the index to calculate the interest to credit your account. The carrier will usually assign a cap to the maximum amount that can be credited to your account. One advantage of an equity index life insurance is that you can receive an above-average return. This happens when the selected index does exceedingly well. Another advantage is that the policy loans are possible and that they are generally exempt from income taxes. There is no strict obligation to repay the policy loans. However, if you surrender your policy, outstanding loans become taxable in the year that the policy lapsed. Death benefits are likewise income tax-free. The cash values account will grow tax-deferred of income taxes just like an IRA. There is no cap on the amount of money you can contribute each year. The face value of the policy is paid directly to the beneficiary in case of the insured's death. There is no need to go through a lengthy probate like in some wills. Lastly, equity index life insurance allows one policy to be exchanged to another, also tax-free. Downside is that it normally requires a long commitment. Policyholders usually borrow from the policy on its latter stages. Borrowing during the early part of the policy will greatly diminish the death benefit sum. An astute investor should also monitor the expense ratios. The expense ratio for an EIUL will vary. It will depend on the index's performance, date of death, and amount of distributions taken. One should expect an average EIUL expense ratio within the 1% range. That's it for now. On our website, you can find more posts as well as life insurance calculators and other financial tools. I hope you enjoyed it, and don't forget to subscribe to our podcast channel on YouTube. We would love to know your choice of life insurance, so feel free to share them on the comments below.